This is an SNNLive Newscast. I'm your host, Robert Kraft, Editor-in-Chief of StockNewsNow.com. Today we're doing a business and earnings review with Gary Weis, CEO of Sonic Foundry, Inc. We're speaking with him via Skype from his headquarters in Madison, Wisconsin. Sonic Foundry, Inc. is a public company with the ticker symbol SOFO. Gary, welcome to the program.
Good to be with you, Robert.
Thank you so much for joining me today. So for our audience, I wanted to start off with an overview of Sonic Foundry.
Sure, let me jump in. I think the easiest way to describe it is our company has been in the business of providing services and products for capturing lectures and presentations for both corporate customers and higher education customers. The technology basically offers a wide range of solutions. We sell solutions. We don't sell individual hardware or software components. And basically we can range all the way from a very simple low-cost capture in a classroom up to the high end of capturing multiple concurrent videos and slides in very high definition for a more sophisticated user.
Okay, so I did some research and I looked through the company's website and all of your filings and such. And my question for you is, what exactly is the MediaSite video platform and who is your target customer?
The MediaSite video management platform is a collection of individual software components. And it's basically oriented so that a user can focus in on their video content to their target audience in the way that they want to best showcase their content. In fact, we call one of the modules the showcase module. It assumes that the customer has already imported video or captured video either using other products that we offer, capture products that we offer, or they can import video from other sources. Now, in terms of who the target customer is, we range all the way from very high-end universities that have made strategic investments in our technology, such as the University of Leeds in the United Kingdom, where they have over 250 of our recorders installed, and they are very aggressive users of our showcase technology. Down to individual schools and individual universities. Business schools, engineering schools tend to be very aggressive targets for us because they have a high value of capturing video content. On the corporate side, we range from corporate events business, where we will actually go on site to capture a corporate event for customers. We'll capture breakout rooms, major meeting rooms, and make that content available very quickly for either hybrid meetings where attendees are virtual attendees through the network, or on-demand content review for attendees at those meetings, as well as a wide range of other corporate products that we offer to the corporate customer.
So just as a quick follow-up to that, because you're talking about you're working with larger institutions, what's the sales cycle like when dealing with schools and governments and the like?
Sales cycle will vary a lot. It will depend upon what the customer is trying to achieve with our technology. So for example, some customers actually build new universities from scratch, like in the Middle East, and the sales cycles there can be 18 months to 2 years, depending on the complexity of the school and so forth. In other cases where we're using technology like something we call My MediaSite, which is really a product that allows an individual instructor to capture classroom material at their desktop or at their laptop, it can be a very short sales cycle. It can be just a couple of months. But it does vary quite a bit depending on the complexity of the customer situation.
All right, so in mid-May, the company released its fiscal second quarter 2016 financials. So I wanted to ask you, what were some of the highlights of that reporting period?
Well, probably the highlight, a couple of the highlights are significant growth in both billings and revenue. We track billings, which is really how we measure the internal functioning of the business. We collect cash for our services in advance, which may be spread over multiple quarters in terms of revenue recognition. So from a billings perspective, we grew at about 12% year over year, same quarter year over year. Revenue was about 19%, so we had significant growth. Gross margins, we typically run 72 to 76, 77% gross margin, so we had $7.3 million of gross margin in the quarter. Adjusted EBITDA of about $461,000 positive. That compared to a loss last year, and the swing in total was about $762,000. Unearned revenue, which is a measure of the difference between billing and revenue, grew by 27% year over year. So very nice quarter from our perspective in terms of financial performance.
And also, I wanted to ask, based on what I've read from that the report, what are some of the company's growth plans for the business?
Sure. First off, the growth plans that we have are focused around geographic expansion as well as product expansion. And let me talk a little bit about each one. If you follow the company, you know that we did a couple of acquisitions several years ago. The most important one to us is in Japan, where we have begun to establish partnerships with some of the major companies in Japan to bundle our technology with their technology. Sony, Hitachi Cable, Toshiba, just to name a few. We think that will pay off handsomely for growth for us in Japan because we'll have another access to customers through the sales and systems engineering organizations of those companies. So we're looking for that to produce good growth in Japan. In a more product-oriented sense, we are looking at growth through expanding the leverage of our existing product set, but exposing it in different ways to customers. So for example, we have an offering called Join Express, which is meant to help individual customers who have video conferencing systems to capture their content. You don't have to go through the full installation of the media site in your company, but as a service, we can capture video conferencings for you. And finally, we have a partnership in China with Newsoft Pushy Technology, which we look for our ability to capture growth in the China market as well.
All right, so just to quickly wrap up, I also want to know from what you can tell me, what are some of the company's near-term milestones, for maybe the rest of 2016, and then also some of the long-term goals for 2017 and beyond?
Sure. For 2016, the goal is basically our guidance. We published guidance at the beginning of the year, which basically said that we would have revenues ranging between $42 million and $45 million for an outlook for the full year, and for EBITDA, $3.5 to $4.5 million, and essentially being about break even to $1 million positive in net income. We're on track based on our first 2 quarters to meet that guidance, and so that gives you the short-term view. Longer term, we obviously have goals to continue to grow top line. The business is very leveraged, meaning we take a significant amount of our growth on the top line and put it through to the bottom line just because of the operating cost structure of the business being relatively flat. I really wouldn't want to get into any specific goals, but obviously continued growth in the 12 to 15 to 17% rate on billings is probably a safe assumption, right, for people watching in terms of growth of the business.
Okay, Gary, so where can our audience go and find more information about Sonic Foundry?
They can go to our website at sonicfoundry.com. That's the best source for all of our investor and product information.
Well, Gary, again, thank you so much for coming on to the program. And just so you know, we're recording this interview live via Skype from Gary's headquarters, or the Sonic Foundry headquarters in Madison, Wisconsin. Again, with me has been Gary Weis, the CEO of Sonic Foundry, Inc. The ticker symbol is SOFO. Thank you again.
Thank you, Robert.